Hey guys, Tony here. I did want to come on here on YouTube, TikTok, wherever you're watching me. Again, I'm still new to this whole creator thing, but if you guys give me a like and leave a comment below what you guys think, just about the market in general, about yield, spawns, anything that I'm talking about, just giving me a like really helps out the channel to grow, and it helps the algorithm push push my videos out to other people that have like similar interests like you guys. That anybody that wants to learn about options or swing trading, technical analysis, or just your just general trading stuff. I'm definitely I guess that's what like my channel is about. So if you guys can give me a like, I'd really appreciate that. But let's get into the US 10-year and why I've been not necessarily shorting, because there is, I don't know where to actually short the US 10-year, but you guys already know that I've been on my bond play for like the last month or two, after I actually saw the sell-off on the 10 on the US 10-year, right? I expected the sell-off for the US 10-year to actually start back in June. After June closed, I've been in TLT year out calls ever since I think July 1st, or I think June 30th, as soon as we actually did close on the month. So I think for the most part, I think that my trajectory for the yields, I'm not necessarily saying that I'm expecting a full, for us to actually see a negative yield, right? That would be absolutely insane to actually see a negative yield, for the U.S. market. But I do think that we might see lows of 0.5% of a yield in the next year or so. And my forecast right now in the next 272 days, so sometime in early Q1, Q2, 2022, I am expecting the yields to drop heavily. And I just kind of wanted to update you guys, because even right now, starting the month of August, we are still looking at a very heavy drop in the yield market. We're not looking like we're going to keep, it doesn't look like we're going to rebound anytime soon, right? Even right now, touching that 50 MA, it doesn't really look like it wants to bounce on the high side. It doesn't look like it really wants to hit on the high side. And looking at previous, previous rallies from the actual yield, what happens with it when it hits the 50 MA on the bottom side, right? It actually crosses down and it keeps running. Like there isn't too much of an instance where it bounces off the 50 MA, and this is going back a long time, right? I can go back for a very long time, and most of the time, I'd say like 9 times out of 10, the yield doesn't really matter where the 50 MA is, because it tends to kind of drop, maybe it retests a little bit, and then it just continues to drop to the downside. Like I said, the worrying part is that if we do create some sort of a sell-off right now, when the stochastic is oversold on the weekly, I do think that we're gonna sell off hard, and it's not gonna be pretty. As of right now, we are completely bearish on the US 10-year yield, and I think we're gonna continue this trajectory down. We might see a little bit of a sideways trading, and it does look like on the day we might even see a death cross sometime in the next, definitely in August. It does look like in August we're gonna be seeing a death cross, the 50 MA crossing under the 200 MA on the daily chart. The last time we actually did this was back in, what was the last time we actually crossed over? This was a long time ago, right? This was back in, we're getting close here. I hate that I have to go so far back. The last time that we actually crossed under was back in January 2019. And as soon as we actually had that cross, we kept trailing down for a very long time, right? And we just kept going down and down and lower and lower. We didn't actually start, we actually hit peak lows on March 20th. March 20th was our peak low. And then from then we actually started recovering a little bit to the high side. But it does look like we are going to be creating another death cross the month of August. And we're going to keep that trajectory towards the downside, especially on the daily chart. And even, like I said, on the monthly, we're still looking relatively bearish. If we do see a negative yield, that would 100% be, supremely bad for the U.S. stock market. But it's one of those things where nobody really knows what's going to happen right now, right? We still have the 50 MA under the 200. We're still definitely in a bear market for the US 10-year yield, and it seems like we're going to keep on this trajectory for a while, right? And I think the last time that we actually dropped like this was actually the start of back in May of 2018. We hit that trigger, and then we just kept dropping to the downside. And I think that's going to happen all over again. I think we're gonna see a drop like that sometime again this time around. Like it looks like we're looking at actually dropping like a something similar amount, right? So last time we dropped around a 1.4%, like a 1.4 yield. It looks like we might do the same thing. And that's just kind of the average of what happened before. Like I can go back months and months and months, and I can probably get a really good idea of how much we've actually dropped according to a perfect sell-off, right? And essentially, we are dropping around the same level of a negative 0.14 on the reverse MACD, and on the stochastic. Again, we did create tops back up here at the 91 level. So, like I said, the U.S., as long as the yield is going to go down, I think bonds are going to keep going up, and I do think bonds are going to hit that 170 mark or that 170 price within a year or so, which is very concerning for the market. And I told you guys, the market is very weird right now where, if I had to use in what is it called, an analogy, forgot the word. But if I had to compare how the market is right now, it's, picture you being in like the coldest part of the United States, right? Or just somewhere in the world, being in like Antarctica or whatever. And then it being like 0 degrees outside. And then for whatever reason, you go into the water, into the lake, like 100 feet away, and that water is warm. It makes no sense. Why would the water be warm when it's freezing outside? And that's how the market is right now. The market is essentially reacting weirdly. Like today, I did see the bonds rise, but banks didn't drop. So, usually banks tend to drop when the bond rises, just because the people are putting their money into a bond where it can relatively make more than the money market through a bank where it has a less yield, right? So if you have the yield is less, you're not going to put money in the bank because you're essentially losing money. It's cost opportunity, right? But as of right now, the U.S. 10-year, I still think it's going to keep dropping. It doesn't look like there's any signs of the U.S. 10-year for it to keep dropping. And on average, it tends to run from what? What was the last run that it actually did? It ran for what? 457 days. And the average is actually a little bit over 250 days. So we can expect, I'm projecting that it's going to stop dropping Q1, Q2, 2022. But I think from now until there, I think the yield's going to drop. I think the bonds are going to keep rising to the upside. I think banks are going to suffer, but I don't know how the rest of the market is going to be, is going to be trailing, because the SPY keeps hitting new all-time highs. Big tech keeps running super hard. If I had to guess, we're going to stay in this really weird market that we're in, where it doesn't make any sense, where big tech is essentially propping up the SPY and you're not seeing a drop off. I think tapering is going to happen eventually, maybe sooner than later, but for right now, I do think, I think yields are going to keep dropping, and this is just generally what TA is showing me. And I told you guys, like a month or two before it happened, I'm like, you know what? I think the yields are going to drop. I think TOT is. I think the bonds are going to start rising, and I started talking about this back like in, I think March or April, right? And we actually started seeing the drop the month or 2 months after that. So like I said, I still see my forecast about a year out where bonds keep rising, yields keep dropping. Banks are probably going to keep suffering. They're not suffering now, but as soon as we close a month bearish for Wells Fargo, because as of right now, Bank of America, Chase, Citi, every single bank is closed bearish for a month. But the only one that's left is Wells Fargo, and that's the one that I'm looking to start shorting, because I think Wells Fargo is going to be the one to actually drop pretty significantly once that bear trigger hits. But again, just a quick update. I still think bonds are going to keep rising. I think yields are going to keep dropping. I think banks are going to suffer as soon as Wells hits that bear trigger, and the stock market it might keep rallying. It's just a super weird market. But just keep an eye out for yields, for bonds, and just the general market. Keep an open mind, because if you're looking at investing 100% of your money right now, it definitely doesn't look like the best idea, right? I am not a financial advisor, so don't take this advice with a grain of salt. Save your money. If you have $100 to invest $50 and keep the other 50. just in case something happens in the next year or so, right? Because there's definitely something going on in the market, and it's generally happening the same way that we saw last year, February 2020. So there's a lot of stuff going on and a lot of things that can happen, and there's too much risk right now compared to the actual reward. So I'll see you guys later.